the probability of Ethereum going up dramatically in price because of that alone is very high, the greatest trade in the world. And I think the opportunity in ETH is better than the opportunity in Bitcoin in March 2020. I'm all in. This whole thing, the more time I spend on it, the whole crypto space, and the same is happening with technology at the same time, which is what the Exponential Age Thesis is built on, is like, we're about to go through the fastest period of technological growth and adoption in all recorded human history in the next 5 to 10 years. And nobody is prepared for it. Humans are simple creatures. We think in linear terms. We can't understand exponentiality. It's just not something that suits our brains. But let me explain what's going on in crypto, because that's our focus for today a lot, is the internet between 1990 and 2000. That period, the internet grew at 63% a year. It was the fastest adoption of any technology in all recorded human history. Okay, how's crypto doing? Crypto's growing at 113% a year. It's the same number of users as the internet had in 97, just before you decided to leave the world of finance and jump headfirst into it. People told you, oh my God, the dot-com crash, it was a disaster. Well, it wasn't, because out of that came Facebook, Amazon, Google. I mean, you name it. It was the start. It wasn't the end. So we're growing at 113% a year. So this is double the fastest adoption of any technology. That is exponential growth. So we're at about 140 million users as of today of crypto worldwide. If you lower the rate of growth to 83%, to be slightly conservative, you're at 1 billion people by 2024. That's 3 years. It's like, okay, I can't get my head around this, but that's how fast it's growing. And it gets you to about 3.5 billion by about 2027. So basically, you're going to get to half of the world by the end of this decade. Then comes Bitcoin in 2008. So, and you've got something super powerful, because what you've got is a network where the users of the network have Bitcoin. The value of the network is Bitcoin. So it becomes a network like no other, with all behavioral incentives aligned, where everybody is incentivized to grow the network. This is why it grows so fast. So Bitcoin starts the whole process, and then everybody realizes this business model of tokens, network effects, and all of the technological benefits work for almost everything. And that's the rise of NFTs, that's the rise of DeFi, that's the rise of social tokens, that's the rise of so much that's all going on so fast it's hard to keep up with. This is actually pretty easy in many respects, because A, you've got Bitcoin, which is a monetary network. You've got Ethereum, which is basically a platform for all of this. And then you've got a bunch of other things that you can invest in. But the whole space is moving in size, and it's much easier investable than, let's say, the NASDAQ was in the past. You didn't quite capture the value of the internet, because this is global. You know, when you bought, Juniper Networks back in 2000, that was a US firm. Yes, it was global, but you weren't capturing the global value of the internet. You had to go and buy a share in all of the internet firms. Here, one thing fits all, and it is amazing. And I don't know how big this is going to be, but it's a lot bigger than anybody thinks it is. That is happening at the same time as AI goes mainstream exponentially, robotics goes mainstream exponentially, autonomous vehicles, EV technology, genetic sciences, distributed computing power, all of these things, 5G technology, or space Wi-Fi, are all happening at the same time. And they all are connected. And they're all driven by networks. And I don't think that's going to go away for a while. I think people are going to be this is going to be very unsettling, this whole period, but incredibly rewarding. They're not brave enough to make this decision. What they're terrified of is the regulators coming after them. They're not thinking yet of Binance as a competitor. We need to stop them. So I don't think that's happening. I think what is happening is the regulators are far behind We know they want to regulate, but we don't know how. And nobody wants retroactive fines. All the banks are fed up with that because they've been paying fines since 2008, and that hasn't stopped. So they're terrified. The regulators are terrified because there is a lot at stake, because suddenly there is a decentralized financial system that is probably broader than finance alone. It's the value of money, the value, it's the internet of value, and they don't know what to do. How on earth do you regulate it when you have things like DAOs and decentralized exchanges that don't exist? So everybody's scared. The regulators know where the world is going, I believe. I don't think they're stupid, and I don't think they're going to stop it. I think they just want to slow it down so they get a chance. The dilemma is everybody knows they're being disrupted, including the BIS, the IMF, the ECB, all of the central banks, all of the main governments. They're not stupid. And they don't really know what to do. There is a sense of arrogance, which all of us in the crypto markets sees as their sign of weakness, is the arrogance, is the non-acceptance of what is really going on. And that usually means they'll probably move too late because they're still trying to regulate, the simple things like exchanges. Meanwhile, DeFi's exploded. And then they get onto DeFi in 4 years' time, and NFTs are now the biggest thing in the world. There's no way they can deal with this pace of innovation. The sheer number of people at an entrepreneurial level that are involved in this is like nothing I've ever seen before. It's more than I saw with the internet. Again, I don't think their intent is to get rid of Bitcoin. It's to clean it up. They've got wild speculation going on. They've got a problem with their private sector shadow lending markets anyway, and crypto is being used for it. Also, they've got a problem with money going offshore. So they're just trying to just say, right, stop everybody. We want to get this organized so we can deal with it. I think we will see that periodically. We haven't seen it in DeFi, but that's coming. Because there's no disclosure of risks and stuff like that. We understand there's a lot of scams in the space and things there needs to be a hurdle, but why should somebody restrict somebody from the opportunity to make money? In the US, you have this term accredited investor. So I'm an accredited investor, so I get to do anything I want to make as much money as I want and lose as much money as I want. But somebody else is not allowed to. So you're perpetuating the 99% versus the 1%, even though you're trying to do the right thing. We need to change this. Now, we've seen some of the rules on crowdfunding change. We've seen some of the rules on who can invest in startups. Most cryptocurrencies are basically real-time mark-to-market venture capital bets. We just need to teach people how to take risk, not stop them taking risk. And humans are gamblers. If they want to gamble, they will gamble. They'll gamble on the horses, they'll gamble on the football, they'll gamble on anything. So if you think that by regulating who can invest in cryptocurrencies, you're not going to stop gambling, you're going to stop gambling in crypto, they'll just go somewhere else. It's ludicrous. So they need a better understanding really of what is going on. And it's hard because it's engaging young people at scale. And let's say you're the typical millennial kid who's now 32 years old, I think the average age. So you're just starting to come into peak earnings. You've got no savings. You've still got your student debt you're trying to get rid of. Now, if you look at the size of those markets, equities, bonds, and real estate on a global basis, like global real estate's about $100 trillion. Global equities, global bonds, they're all like the $200 trillion market. And then you've got crypto, the fastest adoption of technology in all recorded history, which is the internet of money, where all of these things are going to be tokenized and will be part of this. It won't all be Bitcoin. Bitcoin's just one of the expressions of this. So that space is currently about $1.5 trillion today. So for it to meet somewhere around the equity bond market size, that's 100x from here. If it actually absorbs all of those markets, well, that's a 500x. So 100x, you, me, nobody in history, anybody has ever been given a whole asset class, an entire asset class that can go up 100x to $200 trillion. We're going to tokenize real estate too. Because then maybe out of one of those fancy buildings, one of those apartments gets tokenized. So you can put in 10% of your net worth into it, and I can put in 5% of my net worth, and somebody else can put in 50% of their net worth. And because it's fractional and it's tokenized, We all get to participate without it just being the rich get richer. Fascinating. So there's a lot coming. There is crowdsourcing of information, the quality of information that's out there. Yes, there's a lot of noise, but the quality of information, the people who are trying to help in this space on Twitter, on Reddit, and all of these forums is extraordinary, even on TikTok. So people are trying to help you because of network effects. Means if you bring more people into the network, it goes up in value. And also people passionately believe in the point of this thing. So it is engaging young people, because also all of those millennials grew up in 9/11, 2008, and now the pandemic. They have no trust in institutions. They trust institutions implicitly in some ways, but finance is the big one that they don't, because their parents lost their houses and jobs. And so when you're seeing an opportunity that is social media in nature, that's native to the internet, that they understand and live in, that offers them huge potential reward, and they can stick it to the man, well, kind of gets interesting. What is going to derail that? Is bad news about Tether going to derail that? Highly unlikely. Is regulation going to slow it down? Well, I think regulation speeds up adoption, because then NatWest won't be saying, oh, don't use Binance. They're like, okay, fine, you do what you want, here's the rules. So it's very difficult to find a world where adoption goes down. And at this pace of adoption, it feels very difficult indeed. So I just try to first principles, keep out of all of this, because everything sounds amazing. And we don't know what's going to go to zero and what's going to go exponential. But generally, it's that network adoption model. That's the truth. You know, I've been involved in Bitcoin's first 2012, 13, and I get the value proposition. I get what it is. It's perfection as an asset and its store of value. And yes, it's still too volatile to be a store of value, but it's compensated by the fact it goes up a lot. So, you know, we don't mind. We have to accept the volatility. I was heavily invested, in fact, 100% of my liquid net worth in this, which is why irresponsibly long was the terminology. Although I didn't use leverage, I'm all in. And then I started looking at the chart, because I love a chart, of Ethereum versus Bitcoin. And I'm thinking, this looks like it's basing. This looks like it's going to break out. And this is how I do a lot of my macro thinking. I start with a chart, think, why is it telling me that? So then I start doing work about, okay, well, we kind of think we know how to value Bitcoin because we're using this stock to flow model that Plan B has, and we're doing all this stuff. Maybe it's something else too. Maybe it's network effects. So, I wonder if Ethereum works, because everyone tells me, oh, well, you don't want to touch Ethereum. You know, it's a scam. It's a shitcoin. It's going to underperform. I'm like, once you tell me something like that, I'm going to look at it. You know, if it's something serious. So I did the work, and it's like, not only is it getting faster adoption than Bitcoin, it's working perfectly in terms of price with Metcalfe's law, and it is almost mirroring Bitcoin back in 2017 with the kind of lag by the number of years, except the network's going faster. Then I looked at the quality of the network, like the amount of connections, and you see that people on Ethereum have built all of these applications, which is all of DeFi, all of NFTs, other uses of smart contracts. We've got central banks using it, for the European Investment Bank putting bonds onto it. We've got people wrapping Bitcoin on it. People are wrapping securities on it. And you're like, okay, this is the platform for now. Things can change. Its adoption is twice the speed of Bitcoin. The probability of Ethereum going up dramatically in price because of that alone is very high. Ethereum got quite expensive to use because gas fees. Well, what they're going to do with fees is they're going to start burning Ethereum, which is basically like a share buyback, which makes it rarer. So the issuance rate probably goes from 4% a year to, we don't know, but let's say 2%. Okay. And then we've got another thing coming in Ethereum, which is ETH 2.0, which is moving to proof of stake. And what's very nice about that is we all get rewarded by staking our ETH. So we get through this 1559, probably everybody ends up staking their ETH because the price is going to start rising. And so everyone locks away. So there's a bunch of Ethereum get locked away. There's a bunch of us who are also holders who've stuck it in our cold wallets. And then there's all of DeFi, which is locking away billions and billions, tens of billions of dollars of Ethereum. The free float of Ethereum going into this is 13%, and it's falling every day. A, everybody's going to stake their ETH because why not? B, if not, you're not going to keep it on exchange because it's going up in value, so you tend to put it in a cold storage. And so there's no supply, and you're burning ETH every day. So the supply keeps going down, and the network effect that I've been talking about means that the demand is going up exponentially. So a limited supply asset that is becoming more limited with a backdrop of exponential increasing demand can only equal exponential price rises. The greatest trade in the world. And I think the opportunity in ETH is better than the opportunity in Bitcoin in March 2020.
You still own Bitcoin?
Yes, but it's a lesser part. Yeah, I think 55% ETH, 25% Bitcoin. Then I've got a basket of everything from DeFi protocols to other big protocols like Polkadot, interoperability stuff, equally weighted because I don't really know. And I'm just not smart enough to figure it all out. And then I've got a bit of a macro bet in metaverse and community tokens. But again, small. Everything's really an Ethereum, Bitcoin bet for me still. But I need to have an open mind because this space is too close-minded. The space is because you're rewarded to be tribal and back the only one true thing, true asset. As investors, we need to be careful of that bias. So I don't know. So some very smart people that I know say, listen, Polkadot is a really serious project and this could do this, Filecoin or, there's a bunch of things that people say, listen, you don't really understand the use case yet. And probably in 3 years' time, we'll be talking more about it. So I kind of say, yeah, okay, I'll keep an open mind. I have an open enough mind that I even own Doge. But then you've got Elon Musk telling you, hey, I want to build on this. Why? Well, because he's got all these users. So again, I keep an open mind to all of this. People are too quick to say, this is never going to make it. Like Cardano, right? There's a huge fight in the community, Cardano and its smart contracts. And, is it going to amount to anything? Is it going to amount to nothing? I don't know. And that's okay. And we should all be a little bit more comfortable saying, I don't know. It's pretty interesting. Let's see how it goes. I can place a small bet and I can't place a big bet yet because I don't know enough. Maybe you're really in the space and you know it inside out. And you think, yeah, you know what? I can see what's coming down the pipe on the plan. I think this is going to work. I can take a bigger bet. That's okay too.